Hello everybody, in this video I want to review the portfolio updates from Berkshire Hathaway, the company of Warren Buffett. He's preparing to retire, he will leave as the CEO. So yeah, that may be the last videos you see with Warren Buffett's face on the thumbnail, because you will have two portfolio managers, Ted Weschler and Todd Comps, that will manage the majority of the portfolio right now. Now, Warren Buffett is helped by these two portfolio managers, and they manage, let's say, 10% of the assets for the portfolio. As Warren Buffett will retire, they will manage a meaningful portion of the portfolio. So it will be much more interesting in the future to monitor what they buy and what they sell. Anyway, they have bought some things, sold some things, including Google. They have first bought a Google position after years of missed opportunities, so it will be pretty interesting. So yeah, it will be a complete review on the portfolio, what they have bought, what they have sold, to see if this is a good hunting ground for you. In case this is your first video from this YouTube channel, welcome. My name is Christophe Nour, I'm French. I've been investing in the stock market for almost a decade now and have achieved a performance of 25% per year. And actually, looking at this website, Dataroma, looking at the 13Fs, looking at what super investors are buying, has always been a great hunting ground for me, because you can get in the brain of Warren Buffett or Howard Marks or Lee Lu or Monish Pabrai, and you can learn a lot of things if you just copy what they have bought. You know, it's a first filter, because these companies that Warren Buffett and his team have bought have passed the first filter, which is great. This is a very, very good hunting ground if you want to find new opportunities. So, in the last quarterly updates from Warren Buffett, the goal was very clear: to reduce the Apple position. And I remember vividly when they started to reduce the Apple stake. I was in Omaha at the time, at the annual meeting, and they clearly announced that Apple has become too expensive and they want to trim the position. Not maybe sell completely out of Apple, but they want to trim and trim and trim, because you have other opportunities in this market. I remember vividly when he sold at the top a couple of months ago, people were praising the god of investing, because after this the stock was down. And now that Apple is back to all-time highs, people say how stupid Warren Buffett is. Well, this is how life goes. You have sentiment that is changing. The facts are the same. Apple is a company that is profitable, but not growing too much. If you look at the revenue growth rate, you are 3, 4, 5% growth rate in revenue. But you have a valuation that is pretty expensive, right? What is the PE ratio for Apple right now? We are at 36, 37. So yeah, pretty expensive price to pay for a company that is not growing much. So he's continuing to sell the position. Before, it was the large majority of the portfolio, and he just trims and trims and trims. And in the future, I am strongly forecasting he will continue to trim, especially as the price is going up for Apple, okay? By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. The second largest position is American Express. It was not always the case. You all also had Bank of America that was like high there. But same thing, he is trimming Bank of America. This is not the first time he is trimming Bank of America. If you look at the last quarter, he trimmed. If you look at the quarter before this, he trimmed again. So 3 quarters in a row, 4 quarters in a row, he's trimming. 5 quarters in a row, he has been trimming. Wow, how long can it be? I think that's pretty much it. He has been selling his position from Bank of America for 5 quarters in a row. Maybe that tells you something about what he thinks about the banking industry right now. Well, I would not touch the banking industry at the moment. It's a little bit complex. Warren Buffett knows this industry much more than anyone else. So if for more than 1 year he has reduced his banking exposure, maybe you should too. This is also the reason why we are looking at Dataroma, right? This website is called Dataroma. This is also the reason why we are monitoring what Warren Buffett is doing. We want to check his moves to see if you can copy, you can clone his investment. Okay, nothing has changed for Coca-Cola, Chevron, Oxy. Very interesting, right? Now, if you look at the oil prices, they are down. You have the 52-week lows. Chevron is down, Occidental Petroleum is down, and even with this current drawdown, he is not buying more. This is maybe the first quarter in the past year where you don't have any addition for the oil sector. Okay, Moody's is here. Moody's has been here for a while. He's adding to Chubb a little bit. Chubb is an insurance company that is extremely boring. In case you want some safety in your portfolio, well, you have Chubb. I was a shareholder in the past. This is an extremely boring and simple pick. Okay, you have Kraft Heinz, and here is the big one. Maybe this is what I will put on my thumbnail on YouTube. This is what people love to talk about. A lot of articles, press releases, YouTube videos mention that Warren Buffett has bought Google. Let me clarify some things. This is a small position. It's 1 or 2% of the portfolio. So it's very unlikely that Warren Buffett pulled the trigger. Most of the time, all of the time, when this is a small position, it's not Warren Buffett. It's either Ted Weschler or Todd Combs. Fun fact, in 2016, 15, 16, you had the same phenomenon with a small position with Apple. It was not Warren Buffett who initiated the Apple buy. It was Ted Weschler. And Ted Weschler started the small position in Apple, and then they got more interest. And in 2018, 2 years after this, Warren Buffett was in charge. He became in charge of the Apple position, and he 10x'd the position. He went from 1% to 10% to 15, 20% of the portfolio, 30% of the portfolio, right? So the little push was given by Ted Weschler. And then after 2 years, Warren Buffett understood the opportunities with Apple. Okay, so he made it a huge position, and now it's still their biggest position, right? So I don't think Warren Buffett is behind this move with Google. People will tell you that they have been contemplating Google, looking at Google, monitoring Google for many years. You had even annual meetings from Berkshire Hathaway when Charlie Munger was alive. And at the time, I think it was in 2017, Warren Buffett and Charlie Munger talked about Google, how fantastic this business model was, because Warren Buffett and Berkshire Hathaway were using Google ads for Geico, for their company called Geico. And they saw how great this service was, with minimal costs, with a lot of efficiency, with huge network effects. And I'm quite surprised they are buying Google now. If you look at the Google stock price, well, we are almost at all-time highs. By the way, because Warren Buffett is buying, because Berkshire Hathaway is buying, the stock is up 4% in post-market. So that the pre-market will be up 4%. Very interesting, very interesting. I'm quite surprised between 2017 and now, they had plenty of opportunities to buy Google, and they choose to buy now. Quite intriguing, right? That tells you something else. Maybe it's not Warren Buffett who bought it. Warren Buffett it would be unlikely to have Warren Buffett buy Google. Very, very unlikely, especially at these prices. You have a valuation that is not cheap at all. So yeah, when he bought Apple in 2016, when they started the position in Apple, Apple had a PE ratio of 10. And when Warren Buffett increased the Apple position, the PE ratio was what, 15, 16? And now Google is 25. So yeah, not the same valuation framework here. Maybe they are seeing something that we aren't, and we are not looking at the good things. Or maybe they're just buying a very good company at a reasonable price. Or yeah, that tells you a lot about what they think about Google. Maybe in 2 years, Google will go up in value for some reasons, and Warren Buffett will have an advisor role here to ramp up the Google position. Well, you never know. You never know. Very unlikely. Warren Buffett is going into retirement now. He's 95. So I think Ted Weschler and Todd Combs will increase this position in the future. Okay. You want to be careful also about something else. Sometimes Berkshire Hathaway is buying a company and they sell this stock after 1 quarter. It has been the case for Oracle. If you look at Oracle, very few people remember this. And I've seen no one on YouTube or Twitter talking about this. If you look at the stock price of Oracle, it goes up and to the right with a lot of volatility. Warren Buffett bought Oracle, when was it? I think it was in 2018, 2019. And people said it's the next Apple position, right? Warren Buffett is buying into tech with Oracle. He will do the same thing as he did with Apple. He will increase meaningfully the position. And guess what? They started the position 1 quarter after this, or 2 quarters after this, they sold. And he was asked a question during the annual meeting in Omaha. Why did you buy? Why did you sell? And his answer from Warren Buffett was, I don't think I really understand this sector. So I'm not comfortable, I'm out. So sometimes Berkshire Hathaway starts a position and they sell out after 3 months, 6 months. I would not get too optimistic about their Google position. Anything is possible, right? Either they increase the position in the future from 1% of the portfolio to 2, 3, 4, 5, 6, 7%, or they just sell out of the position. This is not the first time it happens, but please don't get too excited about Google. I see some people on Twitter, on YouTube saying we are not in an AI bubble because Warren Buffett is buying an AI company. So we are not in a bubble at all. Anything is possible. Nobody knows, actually. If you look at Warren Buffett's history, he bought oil companies in 2018 just before oil prices crashed 70%. So he has not been a great market timer sometimes. Sometimes yes, sometimes no. Anything happens, right? So you have other examples in his life where when he bought things just before the crash. So it is not a sign that we are not in an AI bubble. Okay, this is what I try to say. It's not because of this. Don't get too excited for this. Anything can happen, but it's always interesting to see what will happen now. Now we have a starting point for Google. What will happen in the next quarter? Maybe they sell out. Boom. Maybe they wait 2 quarters. But if they keep the position for, let's say, 2 quarters, so 6 months, now we're talking. So now is the starting point of the analysis, of the review of their portfolio. In 6 months, we will know if this is a position with confidence or just trading the position here and there to get your toes. This is what I think. So now is a little bit too early to judge if Google is a good buy and hold or will wait. Something else I want to mention also, when they bought their Apple position back in the days, 10 years ago, the market cap was really high. Apple was already the biggest company on earth. And they doubled down, tripled down, quadrupled down on the position despite their size. Now Google has a market cap of $2 trillion. People say, it's too high. How high can it go? Well, people said exactly the same thing for Apple when it had a market cap of $500 billion, like $500 billion. It can go much higher. What if the market cap of Google goes from 2 trillion to 4 trillion? Would that be unreasonable? I don't think so. What if the market cap of Google in the next 5, 6, 7 years goes to 2, 3, 4, 5, $6 trillion? Would that be unreasonable? I don't think so. Anything is possible. And now the Apple stock is high. The market cap for Apple is huge. What's the market cap for Apple? I mean, they bought the position with $500 billion, and now the market cap is $4 trillion. So it's an 8x investment. Well, and now you have a P/E ratio of 37. What if Google in a few years has a P/E ratio of 37? Because the moat is increasing, because the perceived value is increasing, etc., etc. Anything is possible. So really looking forward to seeing the moves here. Next one, you have a small trim in Davita, nothing in Kruger. Serious Holding has been a value investment, value trap for many years now. Visa is not moving. Other super investors are buying Visa, by the way, doubling down on Visa. VeriSign is dropping a little bit, and now we are talking about smaller positions, less than 1%. He's adding a little bit to Domino's Pizza, that just had a revamping of their operations. In case this is interesting to you, please check the Investor Day, because Domino's Pizza wants to reaccelerate. So yeah, maybe it's a good pick here. Leonard, nothing. Nucor, nothing. Lamar Advertising, no. He has sold some investments, and I will end the video with that. He has sold D.R. Horton, so a home builder in the US. It was a small position. Well, it completely sold out of the position. For Leonard, nothing. For D.R. Horton, completely sold out of the position. So he's not so bullish on the banking industry. He's not so bullish on the housing industry. He's not so bullish on Apple. The valuation is still expensive. But he's buying some things here and there. A little bit more insurance, a little bit of Google, and a little bit of Domino's Pizza. That's basically it. I hope this review was helpful to you. If you want to copy his investment, please, you can do the due diligence now. You know what to look for. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.